What's up, guys? It's Alex from StackTrading.com. I'm making this video because I've been asked frequently from a lot of traders and subscribers and just traders in our community, what are my favorite technical indicators that I use when I trade? I'm going to go over all of the technical indicators that you see on the charts here today, and I'm going to break them down one by one and how I use them to make the right interpretations and the right analysis for every trade that I get into. So you can see that there's a lot going on here, so I'm going to wipe them off the screen or just hide them for a moment. And let's start off. Let's see, let's hide all of this. So here's just a plain chart. You've got some technicals here. I'll cover these three first, and then I'll add all of those that I just hid back onto the chart. So the first is volume. You've got to know how to interpret the volume. Sometimes when the stock is breaking out really aggressively, or even when it's selling off aggressively, if you see a heavy volume spike like you see here on the first candlestick, the first candlestick is always going to be pretty heavy because it's the first 5 minutes of the day. This is a 5-minute time frame per candlestick. But when you see heavy spikes on the day, it just shows that, you know, a lot of momentum and a lot of shares are being exchanged right at that moment in those 5 minutes. Let's see other standouts. Like, look at this. So you can see this bull flag setup here. This bull flag setup and that breakout. Look at that volume spike here at 10.25. So that big push to the upside from a bull flag setup is a nice volume spike. And as a trader, that's good indication for me that the breakout is going to be pretty strong, which it was. It traded from 579 all the way to a high of 593, all from the momentum created on that bull flag breakout. So that's how I use volume to help me make decisions on whether a move is going to be really good or pretty weak. The next, down here in the middle, you'll see is RSI, Relative Strength Index. I use this one very frequently, especially on the daily charts for a stock. So to keep it simple, anything above 70 is overbought. Anything below 30 is oversold. Everything in between is typically like a consolidation, right? So when a stock is getting oversold, an RSI below 30 could potentially be a good opportunity to bounce it. So let's look at this sell-off that occurred on the opening candlestick here at 9:30. The stock sold off from 583 all the way down to 570, 571. Look at the RSI. The RSI went to as low as 1886 on the 5-minute time frame. So what does that tell you? Potentially on an oversold condition, there could be one, a consolidation period, or two, a nice bounce. So you could have used the RSI at this time frame and at this moment, really in this zone that you see here, to say, hey, Tesla is getting a little oversold. It's below 30 on the 5-minute time frame. I'm gonna keep an eye on it for a potential bounce. Had you used the RSI to help you make that decision, you would have used the indicator correctly, because look at that. You've got some consolidation for about 25-30 minutes, then you've got the bounce. So that would have been a great tool to help you make that analysis. Another technical indicator that I use is called the MACD. Pretty much what I'm looking for is here. I'm looking for these two lines to cross, right? So if you have got the green line crossing above the red line, it's a simple way for me to know that the momentum of the stock is going to trade to the upside. The best example I can give you is right here on this bounce. So you can see here at 10:15, 10:20, you have that green line crossing above the red line, and then the indicator is going positive. Match that with the bull flag, and you've got a nice breakout with a volume spike. So right there in that moment, I'm looking at the chart setup, which is a bull flag. I'm looking at the volume spike with the breakout of the bull flag. and I'm looking at the MACD indicator here, which tells me that the price action is going to push higher. So that's how I use that indicator. I use that indicator as well for the daily chart. So if you can go out on the daily, let's pull up a 1-year chart on Tesla. Let me remove these lines right here. So on Tesla, the best example I can give you is right here. So if you focus here on November 16th, you can see a nice crossing on that indicator, and that coincides with a huge price momentum to the upside. So you can see that it was a nice indication that it was a good buy signal. When the green crosses above the red, it's a buy signal. When the green crosses below the red, it's a sell signal. Here's a sell signal on Tesla. So right here, the green crosses below the red in this zone here. So had you followed this technical indicator, the MACD, sold your Tesla position up here, look at the chart. One hell of a profit-taking zone, because over the next coming days, Tesla fades and drops 300 points from your sell position, right? So not a bad indicator to help you make some trading decisions here. All right, so let's go back to an intraday basis, put a 5-minute time frame. Another indicator that I use are the moving averages. So here I'm adding the moving averages. I trade off the 8 MA for the short-term trends, especially as a day trader, the 50 and the 200. Let's start off with the 8 MA first. The 8 MA is a nice trend that I use, trend line or moving average that I use, because it's short-term momentum that I play very frequently. Especially here, you can see here on Tesla, it sold off, consolidated, reclaimed the 8 MA, established a bull flag, and broke out. Broke out right as the 8 MA touched the price action of that 5-minute candlestick, right? So that is a great entry point for me to play the bull flag breakout, volume spike. MACD is telling me that it's a buying opportunity, and we have support of the 8 MA pushing price action to the upside. So right there, I'm using 4 indicators, giving me a good judgment call on getting into a trade with Tesla. Had you taken that trade, 100 shares here, let's just say as an example, and sold up anywhere around here, that could have been almost $1,000 trade in about 10 to 15 minutes. Not bad. Not bad as a day trader and as a retail trader, right? The 50 and the 200 are longer term time frames that I use normally for daily charts. Especially, you can see here Tesla is on a downward trend, getting rejected off that 50, and right now it's trading off the 200-day moving average. The 200-day moving average is a really strong moving average that institutional traders use and just investors use in general. Could be a nice buying opportunity. Let's see if Tesla bounces off the 200 in the next coming days. But if it fails it, then Tesla is in a lot of trouble. Especially if you have the 50-day cross below the 200, that's called the death cross. And then the opposite of that is if you have the 200-day, the 50-day move above the 200, that's called the golden cross. The golden cross on Tesla occurred down here, November of 2019. So had you bought Tesla on the golden cross, look at the trade you would have made. You would have bought Tesla at about $52, and you'd be holding it up at $583, assuming you're still holding it and you didn't take profit all the way up here. One hell of a trade for a 2-year time frame, right? So the golden cross is a great buying opportunity, and the death cross is a selling opportunity, right, for a lot of traders. So I use those 2 moving averages for longer term chart analysis, but on an intraday basis, it helps out as well. So for instance, Tesla, you can see here, sold off, popped. The price action found a little bit of support on the 200 on the 5-minute time frame and bounced off of it, along with the 8 MA crossing above the 200. So that's good. So you're using 2 moving averages to help make a decision on whether to go long the stock. But then look here, you have the stock trading along the 50-day moving average and the 8 MA just kind of swirling up and down over it and under it, right? Now you have the AMA at this point about to cross below the 200, which means potential further downside for the stock. But then when you have the 50 cross below the 200, most likely, if that were to occur today, Tesla will be in the red, most likely. So that's just my personal judgment call. So you could actually maybe take even a short position on Tesla right now and place your stops at 581 at the high of this candlestick, right? That's a short idea that you could take on Tesla. I'm not trading it. I'm done for the day. I've already made my daily profits and my daily goal for today. I'm just doing this review to show you guys exactly how I would use the technical indicators. So you can see here that Tesla is coming down. You could use those moving averages to help you make a decision on whether to go long, like in this scenario, or maybe even to go short, right, in this zone. So that's how I use the moving averages. It helps guide me and help me make decisions. The other indicator that I use, which is the last one that I use, is called the Bollinger Bands. I like the Bollinger Bands a lot. And the reason why is because the Bollinger Bands tell me if a move is getting too extended to the upside or to the downside. So in this circumstance, in the first hour of the day, you can see that Tesla sold off. Focus your eyes here for a moment. You can see here that at this point, the price action really pushed a little too extended to the downside. The stock was trading a couple of points below the lower Bollinger Band. So what does that mean? The stock is a little extended to the downside, and that's potentially a bounce or consolidation opportunity for the stock, which is exactly what occurred here. So this morning when I saw Tesla, I saw that sell-off. I saw that it traded below the lower Bollinger Band. It got a little extended to the downside. RSI was below 30, so there's two indicators telling me that it's oversold. And then I knew that it was going to have a little bounce consolidation, so there you have it. You got the bounce, right? Then you wait for that consolidation, moving averages catches up. Then you've got the volume spike. You've got the MACD telling you that it's a buy signal right here, and you get the push. So right there alone, with all of those indicators, you've got to just kind of analyze them extremely quickly and make a judgment call on the spot, whether you're going to go long a stock or short a stock. So that is pretty much all of the technical indicators that I personally use on a day-to-day basis to help me make money. And an average day for me is about $1,000 of profits. All I do is I day trade full time. So the reason why I use these indicators is to help me make decisions so that in the first 2 to 3 hours of the day, I make my money, and then I get to enjoy the rest of the day and pretty much do what I want. So right now I'm filming this, it's 1:44 p.m. Eastern, and I'm just taking my time to do this video because I wanted to help a lot of my viewers and a lot of traders that have been asking me this question. So if you've got any more detailed questions, if you want me to give you more examples of this, just let me know, and I'd be happy to create more videos for you guys. But give us a like, subscribe to the channel, help us out with our YouTube algorithm here. And hey, hope you enjoyed, hope you learned something, and we'll see you all next week when we've got the third week of May. And so far, every single day this week has been green, and I'm looking to close the rest of the month green every single day as well. All right, guys, have a good weekend.